Thanks a million, folks. I see plenty of joining us at the moment. I'll just give it about 30 seconds or so, and we'll start off. So that's brilliant. Listen, thanks very much for everyone who's joined us there this evening. A stormy evening. Best place to be is inside, listening about mortgages for the next 30 minutes. What I hope to do is go through everything you need to know from a first-time buyer's point of view, and for anyone who's ready now, or for anyone who's planning to get ready over the next 6 months or so. Just a bit of housekeeping. First of all, you should all be on mute, so just you can leave it like that. We will be getting a recording out after to anyone who's joined us. And again, part of the presentation, I'm going to go through, as if you're in front of me, answering all the questions I feel that first-time buyers typically ask, and trying to preempt those questions. But any other questions, there's a private chat function there. Throw them in as we go along, and I'll try to answer them all at the end. The presentation, I'll try to go through it as soon as we can. And again, I'll be trying to answer all the questions I feel most first-time buyers ask. And again, we'll send you an email, as I said, with the webinar. And if you have any individual questions you want to come to us on, you'll have all the details there about how to find us. I suppose, who are we? First of all, for those who don't know us, we're one of the longest serving mortgage brokers in the country. And the key thing with a mortgage broker is that to have all the access to all the lenders. So we partner with all the major lenders. The main ones being Perm TSB, Bank of Ireland, Haven, which is part of the AIB group. You've got Avant, Finance Ireland, ICS, Spry Finance, and the latest competitor within the mortgage market is Moco Mortgages. And we're delighted to say that we've been selected as one of the only 15 brokers in the country that have got the agency for Moco. And again, what they're doing is they're coming in and they're trying to, I suppose, digitize the mortgage business, which would be great if they all follow suit and making it easier and simpler to apply for your mortgage. So a lot of it will be done online. Your ID, be verified online. Your bank account statements will be open banking. And staying trying within the system rather than having to print off bank statements and so forth. So it's great to have them as an additional option for all our clients as another lender that we partner with. Again, obviously we're experienced advisors and fully qualified. All our advisors would be qualified financial advisors. And again, people tell me it's very difficult, if you're going individually to your bank, it's very difficult to maybe get through to them on the phone or have access to them. What we try to do is make sure it's nearly impossible for you not to contact us. So, we're here on the phone, on mobile, on email. We can do Zoom. Obviously, we have offices here, a number of private offices there for in-person meetings. And again, we invested heavily in our online mortgage tool, My OBG Mortgage. So it's a secure system where you make your application, put in all your documentation, and track your mortgage from there. So it gives you loads of options. And again, we're always dealing with you, though, talking to you throughout the process. We believe, I suppose, when I started in with Oates Breffni Group 20 years ago, nearly all mortgage applications started with a meeting in the office. You sit down, go through the whole lot. Now I'd say maybe only 10-20% would do, start that way. A lot of it is over the phone initially, maybe online. But we love to sit down and go through stuff at some stage of the process too. Whoever wants to do that, it's great. And again, we advise you through the whole journey, start to finish, which I'll go through today, and also down through the years as well after, once you have your keys. And again, the one big thing I would say about a broker, and again, this is the last piece about ourselves, is that we don't charge any fees. Okay, so a lot of people ask, well, how does that work? It's too good to be true. We can give you all the options, all the best rates, criterias, the service. help you get your mortgage, and we don't charge you. We get paid by the banks. So whatever lender it is will pay us a fee. Again, they all pay the exact same amount. So there's no bias to us about where your mortgage goes to. It's about who give you the mortgage and who give you the best deal. Some brokers do charge fees. Again, we've committed, we're not charging fees again this year and for the next number of years. So again, the key point and the trend throughout this presentation will be about you making sure you get choice. Not maybe accepting what your own lender is only offering you, because there's huge discrepancies and variances, I suppose, between how much one bank will give you and another bank and rates and so on. So it's important for you for yourself to get the best deal and making sure you're getting the best advice. The buying journey, I suppose this is one, first-time buyers in particular, you're just not 100% sure on. I suppose, what do we do? How do we get our mortgage? How do we put a bid on a house? How do we look at a house? So this is, to me, is the steps in that journey to getting your keys. So find out, first step there. The first two is a lot we're going to concentrate on today, how to get your approval and how do you prepare yourself to get that. But our initial conversation, if you're dealing with ourselves, we usually have a conversation with yourselves, and from that I can get a very good idea how much you can get from a mortgage. So it gives you a good ballpark figure. We then send you a list of documents that you need to get for us. You provide that to ourselves, and we go and we get your approval in principle, which I'll come to as we go along. Once you have that, that's your piece of paper to say how much you qualify for a mortgage. You can now go and look at properties. So you ring up your auctioneers, estate agents, once you see a house, and a lot of people be looking on maybe auctioneers' websites or daft.ie. Once you find a house that you like, you ring your auctioneer, organize a viewing on the property. You go out, you have a look. If you're happy with it, you can put a bid on it. Okay. Hopefully your bid will be accepted. Once your bid is accepted, you go what's called sale agreed. And again, a lot of auctioneers will look for, proof that you can afford the house. So they will look for confirmation that you have approval in principle with a bank, the proof of funds. Once you go sale agreed, then what an auctioneer will look for is a holding deposit. Typically, that's typically maybe €5,000. And that's to hold the property for yourself. That 5,000, that money holding deposit is fully refundable. Okay, until you sign contracts, so it's fully refundable. Your auctioneer at that stage will also ask you for your solicitor's details. So that's when you need to decide on your solicitor as well. And what they'll start doing, and the two solicitors will start drawing up contracts, and basically outlining the deal, how much is for the property, maybe what contents are part of the deal. So that'll take 3 or 4 weeks for that to happen. Between the time you go sale agreed and signing contracts, what you need to do is ensure you have your full loan offer in place. Okay, so you have your approval in principle. To get your full loan offer, we organize for your lender's valuer to go out to the property. They have a look at that, send it back in, and we get your full loan offer document out, and that goes to your solicitor. On top of that, it would be recommended to get an engineer's report on the property, particularly a property that would be, a little bit older, anything that's not brand new. And the idea there is that, is to make sure, is there dampness, is it structurally sound? Maybe there's a plot of land around it. Are you buying what you're meant to be buying? From a bank point of view, they won't ask you for the mortgages. You don't need your engineer's report. Okay. But it is recommended. A mortgage provider will only look for an engineer's report once the property is typically over 100 years old, or if in the valuer's report they've mentioned they feel a report is required, so that they might have seen something in there, they feel that you should get an engineer's report. That's the only time a mortgage lender will look for that. But for your own point of view, it would be advisable, your solicitor will advise it, and we would advise it as well, just to get that done, just to give yourself peace of mind before you sign your contracts. So once you have that done, you're ready to sign your contract. Now, this is where it gets serious. You're paying over your balance of 10%. So, for example, you're buying a house for 200,000. Your deposit is your 10% is 20,000. You've paid 5. You're paying over the 15,000 now to your solicitor, and you sign your contracts. It's now legally binding. They send that back to the sellers. They sign it. Now you're setting a date for you to get your keys. And between the time you sign your contracts and your keys, getting your keys, from a mortgage point of view, what we would do is help you along with the three main conditions, which is a direct debit, that you can pay again your mortgage from whatever bank account you want to pay from. It doesn't have to be from, if we do the mortgage with Bank of Ireland or Permanent SB, you don't have to have the current account with them. It can be from anyone, as long as it does direct debits on your account. House insurance, and again on the valuation report, it will tell you how much you should insure your house for, and life cover, mortgage protection. So your bank, your lender will want you to have that, and it's basically covered themselves off as much as anything else. If you die, that loan is repaid in full. And again, from our point of view, for life cover, we go through all the banks, or the life companies, you should say, again, and making sure you get the most competitive deal. So that's the steps from start to finish. And you now have your keys. Again, your mortgage is the first step, and find out how much you can get. And again, this is just general stuff here. There is a big difference, as I will keep telling you, about what one bank would give and what another bank will give. And every case is different, and everyone might have a little different bit of a story. And it's important maybe just to identify that up front if you're chatting to your advisor. Again, I'll be going through the main standard criteria for the banks, but there are what they call exceptions to that as well. So about 15-20% of cases can go beyond the standard for stronger cases, and there's still some banks doing that at the moment. And again, for first-time buyers, for mortgage purposes, criterias, they would include what they call fresh start applicants. So people who are separated or divorced, and they're not in the family home and no interest in the family home anymore, or people maybe have gone through the bankruptcy process. They would also be covered under this criteria. So from a mortgage point of view, there are three main criteria I would always tell clients to get your mortgage. Number one is income, two is deposit, and three is showing that you can afford your mortgage. From the income point of view, standard criteria is 4 times your income. Okay, so two single first-time buyers, 30,000 each, no loans, 30-year-olds each, they'll get the 4 times income, typically across the board. Okay, but they will look at other, a lender will look at other criteria as well. So they will look to see how many children you have. Do you have any loans? Do you have childcare? So all those things can impact how much you can get. And again, it will impact maybe your lender, how much they will give you. And again, every lender will give a different amount. So it's important to get that choice across the board. I 2 clients in this morning with me, again, around that age, 30s, 30,000 each. 4 times income is what you can tell them. One bank would give them the full 4 times income. They had 2 dependents. Another bank would give them only, 30,000 less. So for the same applicants, there's a 30,000 difference and of how much they could get. So again, it's just important to get that bit of choice. I suppose from a lender point of view, what they want to do is make sure you have enough money at the end of every month to be able to live and repay your mortgage. So that's where those different criteria come into play. Again, from an income point of view, what type of income do they look for? Okay, so obviously full-time permanent employment, everyone is happy with that. They'll accept that. A lot of times I'm asked about the part-time permanent employment. Is that okay? I'm only working part-time. Absolutely. If you're working 2 or 3 days a week, but you're permanent with the job, that's fine. We use that full income. Again, probation is a big one. A lot of people moving jobs and so forth. The rule of thumb would be private sector work. If you're working in the private sector and you're on probation, typically you have to wait for your probation to be finished before you will be able to get your mortgage loan offer. Now, what I would say to people there would be, if you're 4 months in, I would start the process then. We get you approved, but there'll be condition on your approval in principle to say that before your full loan offer is issued, that you have a letter to confirm you're no longer on probation, and it just means you're not waiting again after that, and you're ready to go as soon as your probation is up. For public sector workers, it's slightly different. Typically, we can get, if you're on probation with them, it's case by case, but we often are able to get people on probation through the public sector, get them to loan offer stage straight away. And there's a lot of times you might be on a 12-month standard probation on the public sector. You might be 6 or 7 months in. Lenders tend to be happy enough depending on your occupation and so on. Particularly cases where, for example, there's many cases where people have moved from one department maybe to another, different type of contract of work, and they go back onto the standard probation. They're typically fine. And we make a case on those. Contract work, typically you have to be on your second contract. This would be the rule of thumb. If you only just started the job on a contract, you're unsure where it's going, a lender is cautious there. But if you're on a second contract and show that bit of history, and what I'd often get is a bit of a history off you in those cases, maybe an employment history and qualification history to show that, listen, you're a good candidate. And even if this job were to be gone, that you have some other options elsewhere in the future. Again, self-employed people. So self-employed people, it's the last 2 or 3 years sets of accounts is what they work off. So what they will look at there is the profit figure. Now we can also add back in depreciation into that. And every bank again is different. Some will look at 3 years, some will look at 2 years. At the moment, you're probably better off looking at a lender that'll give 2 years. With 3 years, you're nearly going into COVID territory, which can impact your figure. So they take an average of the last 2 years, for example. If you're a sole trader, that's fine, it's straightforward enough, it's your profit. If you're a limited company and you pay yourself a wage, you can take the wage. But if you also have a profit and you own the company 100%, then you can also add that back in for your income purposes. And also things like pension contribution or depreciation, as I mentioned already. Again, work permits, another big one at the moment. So again, huge difference between all the banks. But the rule of thumb there would be, stamp 1-4s. Stamp 4s are fine across the board, but people on stamp 1s or stamp 4s, as long as you're working for 6 to 12 months, you tend to be okay there. And again, things like overtime, bonuses, commission, they're ones there that you can add in to your income. So they work off your gross income. It's the gross income before tax. And then you can add in things like overtime, bonuses, commission. You'd like to see a history of it, say for 2 or 3 years. And again, every lender is slightly different. Some will take 50% of that. Others will take up to 75% of that. People like, Gardaí, nurses, and so on, you tend to be able to take 100% of it if you can show a bit of a history of it as well. So you're trying to see who will give you the best, take the most into account in your own case, and who will give us the best deal. And that's, I suppose, is what our own job is. For deposit point of view, 10% is required. So you can get up to 90% of loan to value, as they call it. Okay, so your mortgage, 90%, you require 10%. And where does that come from? So that can come from either savings or a gift or a combination of both. And a question that's often asked is, okay, listen, I'm paying rent, €1,000 a month here. I haven't been able to save. We're paying the rent out, we have kids, whatever it be. Are they okay? Our parents that will give us, very generously, will give us maybe 30,000. Is that okay? The fact they don't have savings, and it is. There's no problem there. Not every lender, but again, there are plenty of options there. As long as you can show the affordability of the monthly repayment, which I'll go through in a minute, they're fine with that. On top of that, for example, if it's a self-bill and you're gifted a site, that can be used as the deposits. There's no problem there. And again, some people are very lucky that maybe the parents are able to gift them a house. They sell a house at a discounted value. So, for example, the house is valued at 250. They say, right, we just want 200 off yourselves for it. That gifting element can be the deposit. So you can give them the full 200 mortgage. Again, not every bank would do that, but there's plenty of options there to do it. And then help to buy. So anything for a new build or self-build, you can get up to 10% through the help to buy scheme, which I'll go through in a little while as well. And that can be your deposit. Again, you don't need a savings on top of that. As long as you have your 10% through that, you can use that. So they're the two main things, income and deposit. And then we come into the third one, which is the one that most people, I find, are is what they have to do a bit of work on. And particularly anyone who's thinking of doing this in the next 6 to 12 months, just keep an eye out for this piece, which is showing the bank that you can afford it. And although you may be on strong incomes and so on, you have to show them through your bank statements that you can afford the new monthly repayment. So, for example, your new monthly repayment is €1,000 a month. What you need to do is be able to identify through your bank statements that you're clearly able to afford that. And you do that by showing them that you're either renting or saving, or maybe again a combination of both. So, for example, €1,000 a month is your new monthly repayment. you're renting for 700, you're showing 300 a month savings. That's your €1,000 there. But you need to show it through your bank statements and show it over the last 6 months. So you make your application. We look back 6 months prior to that and get an average of your rent and savings build up. And again, from a rent point of view, the questions that come up there are, my landlord would prefer us handing the money to them each month, so we don't do it by standing order. That's okay. What I would say there in that situation was maybe take out the rent, once a month, the same day, so that at least we can circle the bank statements for the last 6 months and show that money coming out, and also show maybe a rent book, for example, if you have that there to back that up. But try to do a standing order through your bank statements for your rent, and it's clearly shown every month that that's the case. Again, same thing with savings. I'd always make it very simple. If you need to show a build up of savings, maybe set up a separate savings account if you can. It doesn't have to be a joint one. It can be, if it's two people in it, each you can have a savings account. But try to save every week or month and just have that build up there. And again, the little things to be careful of, which I've often seen, would be, I'll make it simple again for myself. You have 6,000 in your current account at 6 months ago, and nothing in your savings account. 6 months time, you have 6,000 in your savings and nothing in your current account. You still only have the same 6,000. You've just moved it one account. So it needs to be a build up of savings every month. And if you do take stuff out of that, for example, holidays and so on, try not to, if you can, if you're looking to do a mortgage, but that's okay. We can average out whatever the savings is over that previous 6 months. So that's what you do. So it's a regular savings over the 6 months averaged out. Again, if there's once-off cost, for example, I often come across maybe somebody needs emergency dental, €1,000. If you take that out, we can make a case on that and show them the receipt. This is a once-off, payment, and add that back in, or maybe the car broke down or stuff like that. So keep records of that, if that happens. And again, as I said, it's the last 6 months. Some people too ask, I only have a current account. Some people have 10 accounts. Other people only have the one, which makes it very simple. In their current account, can you use that to show the build up? You can, absolutely. As long as there's a good, strong build up in that account over the 6 months, we can use that. And again, the last thing we can use there would be loans. So if you had a loan, for example, a personal loan there, you pay €200 a month for it, there's only maybe a couple of thousand left, we can factor in that'll be gone before you actually get your keys. So we tell the lender, listen, we're going to pay that off before the loan is issued, and we can use that 200 a month, say, towards the affordability as well. So there are the three key things for getting a mortgage: your income, your deposit, and showing the bank through your bank statements that you can afford the monthly repayment. Once we can show that, we ask you for your documentation, as I mentioned. So the stuff that you need for an application would be a salary certificate. So that's a sheet that we would give, and that your employer fills out and signs and stamps to say how much income you're on. Again, it's your gross income that you work off here. Pay slips and EDS. EDS is employment details summary. That's basically your P60s. And again, if we're trying to show a bit of overtime and stuff, we might look for the last 3 years of that. Identification, again, passports, and then it's the last 6 months of all bank statements. So it's your current account, savings, Revoluts, credit cards, whatever you have. All the statements we need for the last 6 months is what they look for. And of course, any loans. So what we do then is we get it together, we package it up for you, obviously put the best case forward for yourself, showing all the pros of the application, and identifying things. If there's little issues with the application, we identify that and obviously show them the reason why they should still lend. And what the bank would straight away do there is do the credit check. Okay, so that's the only thing I don't know about. I can tell clients exactly what I feel they can get, and I'd like to think I have a very good idea by chatting to them how much they will get. But then maybe the bank might do the credit check, and something might come up in it. So again, for all our clients, what I would say is identify things straight away to us at the start, and let's have a chat. I can advise accordingly. Then, if you're ever unsure, if you think to yourself, listen, I'm not sure, I might have missed a payment there at one stage. Everyone can go on and do their own credit check, and you get a free credit check there, centralcreditregister.ie. Go on and do it yourself. You just put in your own ID and your PPS number, and they'll email you your credit report, and that'll identify if there's any issue on it. So any little doubts you have, if you do have that, do that first of all, have a look at that first, and then we can take it from there. And one question people do ask around credit history a lot is around, some people advise you take out a loan, take out a credit card to create a credit history. You don't have to do that. In Ireland, credit score is not a major thing typically for mortgages. The key thing they look for is, have you paid your loans? That's what they look for. If you have no loans, that's fine. If you have loans, they want to see, and they can see a record over the last 5 years of what you have, of your monthly repayments. And that's including loans, credit cards, overdrafts at the moment, is all on that. So you don't need to take out loans to create any credit scores. The main thing is that you paid any loans that you had. Again, after 4 years, even if you had issues in the past, and there's plenty of that, obviously through the after 07 and so forth, typically after 4 years, lenders will look at that again, as long as there's clean credit history in the last 4 years. Even if there's one or two blips, just to say that, tell us about it. We can often work that out. A lot of people might have had a missed credit card or a missed loan payment, but they might have had, 5,000 savings sitting there, but this was just a hiccup. We can make that case as well, and typically that's okay. Again, just to say, if you're abroad, maybe over the last 3 years, you're in Australia, UK, whatever it be, or US, typically they will ask you to get a credit report yourself done from that country. Again, simple enough. A number of credit referencing agencies will provide you with that, but it's just for them to see. They can't see. They can only do the ones in Ireland. They can't see what's happening in Australia or UK and so on. So they want to make sure you don't have any other loans and so on. And the last thing they will look at, obviously, is account conduct. So again, if you have your accounts, just make sure there's no referral fees going through them. Make sure there's no unpaids, maybe your direct debits and stuff like that. So if you have a standing order for utilities or for house insurance, whatever it be, or car insurance, I should say, just make sure that they're paid. If, for example, a lot of cases, people's wages might come in at the end of the month, and maybe a standing order's gone out a day or two before that. That goes into an overdraft, unauthorized overdraft, and you get charged an unpaid fee. €10 hits your account. What you're better off doing there is put in a small overdraft for €200, maybe. Make sure that doesn't happen. Okay, you might have good savings going into the other account. That overdraft's not going to impact anything. It just means that if that does creep into those over your account balance from time to time, that you have that safety net there and you're not charged those fees, because it looks a lot worse having those fees going through your account. Again, overdrafts, that's another question people ask. Should I have an overdraft or not, or should I get rid of it? Overdrafts are fine as long as you're not always in them. Okay, what they call hardcore overdraft. So you have a 2,000 overdraft, you're always 2,000 overdrawn. You're never going into credit. That can be an issue. They might look at that and say, listen, this person's under a little bit of stress. But if you have an overdraft going in and out, that's fine. Again, it's just maybe having your separate savings account and having rent going out and showing that affordability. That's fine. So what you do then, we package all that, as I mentioned, we get it away and we get you your approval of principal. So now you have your piece of paper that says how much you can get, and that's valid for 6 months. So you can now go around, look for your house, as I mentioned. If, for example, you can't find a house within the 6 months, it's easy enough to extend that. So to extend that, you're 5.5 months in, you have no house. What we would ask you for then is maybe an up-to-date pay slip and some statements, bank statements, and they'll extend that for another 6 months. If it's a year in, typically you do have to do a full new application maybe after the 12 months, but after the first renewal, it's fine. The other thing people would ask is that you're 5 months into your approval in principle, you find your house. Okay, what happens then is you get your full loan offer, and that's valid now for another 6 months. Okay, so in effect, you could have up to 12 months there in your application. So don't be worried that the 6 months you have to have everything closed. That's just to find your house and get your full loan offer there. So that takes you through kind of the most of the steps, the key points of how to get your mortgage and how to prepare yourself for it as a first-time buyer. Again, when you're settling down, then you're looking at things like, and this is the type of stuff I'd sit down individually with people and discuss how much how much you can get, obviously, but what interest rates to take, what's the options they have, what offers are out there. From an interest rate point of view, everyone has a view. You see a lot of stuff in the papers about rates coming down. My own thoughts are the European Bank have increased rates over the last 18 months by 4.5%. And I don't see them coming down. They've said it straight up. They're not going to reduce that for a period of time. I certainly don't see that coming down until maybe the last quarter of the year, and then it'll slowly come down over the next couple of years, 2 or 3 years. I still think banks are going to increase rates this year because they haven't passed on a lot of those rates. So my own feeling still, I'd be reluctant to go on a variable rate still at this stage, possibly depending on the size of the loan and so on. But I would be looking at something like a 3 or 4 year fixed rate, maybe if you get a good rate. Rates are ranging from 3.65% maybe for a 4 year fixed rate, up to some banks maybe 6%. So again, huge differences there. So it's about getting the best rate there on that. And then review it. One thing I would say about a mortgage is you might start off at 30 years, 35 years. You should be trying to get rid of that mortgage as soon as you can if this is your private house. So that might be a case of, like target a 25-year mortgage. Okay, so after the first 3 years or 4 years is up, we'd sit down again and see who has the best options for you. Can we now reduce your interest rate? Can we take 5 years off your mortgage by doing that? And maybe paying an extra €100 a month. So it's loads of flexibility there as you go along, and I would encourage anyone to do that, and not just to leave your mortgage there. You'll pay thousands extra throughout the mortgage if you just leave it there and do nothing with it. So you're trying to start off maybe to 30 35, but trying to get rid of that as soon as you possibly can. Again, there's loads of offers out there. There's 2%. There's, if the loan is over 250, you might get €5,000. There's €1,500 for the new bank MoCo, for example, for all first-time buyers, movers, switchers. So again, you look at those offers, but you'll also have to look at the interest rate, what they're offering as well. Who will give it? Who's the best rate? And then look at offers in that order, I suppose. The cost then involved for yourselves. Okay, so the last couple of slides here. The cost involved, so there's no fees, I mentioned already. We don't charge any fees as Ulster Breffni if you do your mortgage through us. There'll be a valuation fee for your lender. So you found your house, as I mentioned, the valuer goes out, they'll charge you about €165 to €180. Again, as I mentioned about the engineer's report, typically the cost there would be €400 to €500. Okay. Again, stamp duty is 1% of the purchase price of the property. So you buy a property valued at purchase price 250,000. Okay, so you pay 2,500 to government stamp duty there on that, and then you have your solicitor's fees. And again, with the solicitor's fee is they're doing the conveyancing for you. They're looking out for your interest, making sure that there's no loan, for example, on the property you're looking to buy, that what you're buying is what you're meant to be buying, and so on, and putting the house into your name. So realistically, again, a 250,000 house, you're talking about adding another 4,000 to 5,000 fees here onto your 10% for you to start putting together. And that should be all costs included there. There shouldn't really be anything else there. For assistance and grants, so you're talking about the three main ones there are the Help to Buy, the Vacant Derelict Property Grant, and the First Home Scheme. So the Help to Buy is straightforward enough. And again, it's a great way to get a deposit for anyone who can qualify for it. So to qualify, the property has to be a brand new property or self-built. The main criteria around this are that the value in completion or the purchase price can't be 500,000 or above, and what they call the loan to value has to be 70% or more to qualify for it. So if it's a brand new property, you get your Help to Buy, you've no savings yourself, but you qualify for the Help to Buy, then that can be your 10%. Again, as I said, it's up to 30,000 is what you can get, and it depends how much tax you've paid over the last 4 years. You can go online as well, and you can find out how much you qualify for that now. You don't have to wait till you have a house or you're looking maybe to build. You can go on and make your application and see how much you qualify for that. So it's the tax over the last 4 years. Again, it's a very good website there. If you're going to gov.ie-doors open, it covers all these grants. It goes into detail of all the terms and conditions. And it gives you the application forms and ways to apply for the grants or assistance as well. The Vacant Derelict Property Grant. So the vacant grant will be for properties that haven't been lived in typically for the last 2 years. And you can get up to 50,000 of a grant on that. If it's derelict, basically you need an engineer to confirm that it's structurally unsound to qualify for the derelict property grant, and you could get up to another 20,000 on that as well. Just go back to Help to Buy. You have to live in that property for up to 5 years as well as your private dwelling, or they could claw that back off you, the Help to Buy grant. But in the vacant and derelict property grant, as I said, very good way to bring maybe properties back into use for first-time buyers. I find a lot of interest in this at the moment. It's gathering pace. I think only one of them, I was reading there today, has drawn down fully in Sligo so far. But that's the reason why is that these grants can't be got until the end. And that's the only problem I see with these grants is that you actually have to come up with the money first. So from a mortgage point of view, we can't really factor this into the mortgage deal. This is nearly separate to it after the work is done. Now there is word in them changing that, thankfully, because I think they need to be able to draw down some of the money during that build to make it sense for yourselves. But that's the reason why there's probably not many have come to full fruition yet. But that will change, and hopefully it will change. And if that's the case, you'll be able to get it up front. Excellent grant though, and a lot of people, you'll see a lot of these, I think, drawn down in the future. The first home scheme again is slightly different in that it helps first time buyers who can't afford the mortgage to or may not be able to get as much of a mortgage to get on the property ladder. So for example, you're looking to buy 250,000. It's typically for new homes or self builds again, or for tenants who have been given a termination agreement and they're looking to buy that property. So the maximum around Sligo, for example, you need to check your own county council. The maximum around Sligo purchase price would be 325,000 that you can avail of. But basically, the scheme, they'll take an equity in your home. So, for example, you're looking to buy the house you're renting. The landlord has given you a termination deal, but you can do a deal with them for 250,000. Okay, you might have the 10% yourself. You can get a mortgage for 200,000, but you're short 30,000. So what do? So you're off trying to rent another property, or you want to stay in this home, you want to buy it. You can use this scheme and get up to 30,000 in this example, and they'll take an equity of maybe whatever that is, 10 or 12% in the property. You don't have to repay it. You don't have to pay interest on it. So it's interest free as such. You after year 5, you pay a small management charge on it. You will have to repay it, for example, if you sell it in the future, sell your property, and you repay it based on the value at the time. So it's that percentage is what you will repay back. So if you took 10% out, it's whatever 10% is of the value of the property at that stage. You're looking to repay it. It's a good way to get onto the property ladder if you're short, you don't have the availability of a gift, for example, or something like that. You know, your future income looks like it's going to go up. You want to stay in your home. It's a nice way to be able to bridge that gap, you know, over a period of time. And again, 10 years time, 15 years time, you don't have to have that repaid. There's no time frame to do that. But as I said, there will be a small management charge after year 5. And again, that website there, gov.ie dash doors open, will give you all the details of all the grants and application forms and so on. So that I think covers off a lot of the criterias around first-time buyers. Hopefully, that's given everyone, I suppose, plenty of information around about what you need to do in the future, or are you ready to go now for your mortgage. Again, every case is different. So give us a call. You have all the details there. If you want to know your own personal circumstances, don't be afraid to give us a call. We'll send you an email out of this webinar as well to be able to review for yourself. And again, all our details will be there. Questions wise, there's a number of questions coming in there. Just go through quickly. I won't hold you that much longer. One of the questions there around income was around maternity leave. So you're off maternity leave at the moment. Can I get a mortgage? Yes, you can. And that's a question that does come up a lot. So a lot of people say, well, I'm off maternity leave. I can't apply for the mortgage now. You can. All we need is a letter confirming when you're going to go back and that you're going to be on the same terms and conditions as you were on, and they will lend. Just a different question there. Can you have the slide deck? Yeah, we'll send that out. We'll send the full presentation out to you that you can review that yourself and kind of go over that as well. Absolutely. Public sector, can you go up increments? Yes, again, public sector workers, for example, some banks, some lenders will let you go up 1 or 2 increments there to enable you to get that little bit more than what you normally would get. So if you're tight, I tend to find around the west of Ireland, certainly the northwest of Ireland, incomes tend to be okay. The loan to income criteria tends to be okay here. The main difficulty tends to be maybe your deposit or showing that affordability maybe over that 6 months. And again, if anyone, for example, is on very strong income and they can't just show that 6 months affordability that I talked about, the newer bank there, Moco, do take a slightly different view on that. And they will look to say, listen, these people are on good incomes. There's a reason why they don't have that savings or the rent is not being shown. And we can work around that too. So again, that's why I talk about having the different criteria and choices there. I think that's most things there. Do we do mortgages for people all over Ireland? Yes, we do. So again, we've an online system there, which again, you can ring us up. We've done mortgages, I think, in every county in the country, in the Republic of Ireland. So we're delighted to talk to anyone there. Just sorry now, last few questions there. In the case of people with, say, health conditions, is this considered at AAP stage when you're looking for insurance before drawdown? It's a very good question. I suppose what I would be saying to anyone, I would always advise people to try to get their life cover before you sign a contract. People sometimes give out to me that you're paying your life cover for a month or two and you don't own the house, but it just means that that's a condition of your loan offer, your mortgage protection or your life cover, and you're signing your contract, and that's basically you pay over your 10%, and it's legally binding, so that your lender won't lend unless you have a valid life cover in place. So if you feel you have any, maybe health issues and so on, bring that up early. We'll get that application going in straight away at the very start, because I'd always encourage people to have that in place before you sign the contract, or have it certainly ready to go. And we rarely do you have, life cover turned down. And there are cases though, and maybe, for example, people had cancer in the last 5 years, and there's various illnesses that can impact that. So we will do our best to again look at all the companies, so to see from a life cover point of view, to see who may give you your cover as well. But it's important to do that before you sign your contract there. Last couple of questions. All right. Yeah, so that would cover off a lot of stuff. And I think hopefully I've covered off everything there throughout the presentation. But again, listen, we'd love to talk to anyone who's interested in getting a mortgage. If you want to find out, can you get it now, or what you need to do, and how much you personally need to put away each month for how much you want to qualify for. Again, all the details are there. We'd be delighted to talk to them. Again, no obligation to do your mortgage with ourselves. We'd love you to do that. Hopefully you got something out of today. And thanks very much for everyone there joining us tonight. Take care.